Hello traders and welcome to another video review. Today is Tuesday, 26th of January 2021. Let's take a look at the Forex calendar to see what is going on the Forex market, and then of course we'll do some technical analysis. So on Tuesday, as you can see, some data had been released. There were data from Japan, not that much impact they had on the financial markets, but they are pretty much more important data released from the UK, the climate count change and the climate count rate, including the average earnings index. So those are data from the labor market from the UK. As you can see, they were all worse than expected. Climate count change had decreased to 7,000, rate had decreased to 5%. So average earnings index had increased to 3.6%. So those are the data from the UK, and we will definitely take a look on the British pound and the euro to the GDP. And that's everything for the London session. During the New York session, we have the key data release of the day. It's consumer confidence data from US scheduled for release at 4 o'clock. As you can see, the market participants expect the consumer confidence to increase slightly from 88.6 to 88.9. So any number above 89 is better than expected and will beat the expectations. That will give a boost to the American dollar, and we will take a look on the American dollar index as well. We got the house price index and Case-Shiller 20 City Index, so those are data from the house markets, and we have a Richmond Fed Manufacturing Index, both scheduled at 4 o'clock. So that's everything for today from the data. So let's take a look at the British pound, and then of course let's take a look at the euro dollar index, of course. What is going on the British pound? As we can see, the market keeps moving inside of this channel, as we have predicted it on the chart. That's no problem with this. With this move, we are currently made a local high. As you can see, the high was made around the level of 1.3745. Since then, we got some kind of a red candle here, kind of a bearish engulfing pattern on a daily time frame, and we have two more red candles. So we are now going lower. Let me just extend this channel. Yeah, somewhere here. I think we can stay with this, and as long as the price trades inside of this channel, of course, the outlook is bullish. But please remember, any violation of 1.3486, which is the current technical support, so let's just make it green for now. So if this level is violated, then of course the outlook will turn from a bullish to bearish, and to be honest, it looks like only this lower level of the channel might prevent the market from falling even lower towards 1.3313. So for now, there is still a positive outlook, a bullish outlook on the British pound, but as you can see, we are just for the last few days, we are just bouncing from the 50 level up to the 64, 63 level on the momentum. So we are not trading with the momentum above 70. So that will be very strong, very positive sentiment for the market. More, it looks more likely like the level of 50 will be tested soon, and this free red candles might be the beginning of some sort of a deeper retracement. We had it many times during this up move. We had one here, we had the other one here, we had one here for the 1, 2, 3, 4, 5, like 10 days in a row. So that's nothing new, but eventually the market keeps making higher highs and higher lows. So what we should take a look at is 1.3486. Of course, lower boundary of the channel 1.33.13, and of course any kind of a new lower low. So that's the levels here. That will be important lower low 1.3226, 1.3135. Any violation of any of these lower levels would mean that the trend might be might be reversing and going lower. So that's the British pound. Let's take a look at the euro to the British pound. As you can see here, we have a bounce, right? We have a bounce from the new low. So the new low was made, let me just put the horizontal line here. New low was made at 8,830, so 8,865 had been violated. So right now this is our new low. Fine, we got some kind of a hammer or pin bar candlestick pattern, which means that the bulls are buying these lows. They don't want to prevent a further slide lower, but this bounce, as you can see, didn't even hit the 8,943. So that's not even 100 pips rally, and we are already stuck somewhere between 8,865 and well, 8,000. The high was 8,917. So if bulls want to break higher, they have to break above 8,943, 8,954 in order to get to 9,068 pips level. But if they will not make it, if they will be, of course, pushed, if they will be under the pressure and from the bears and pushed lower here, that would mean we will, of course, revisit this lower low at 8,130, right? So people will be selling the euro and buying the British pound. As you can see, we are in kind of oversold market conditions. 34 points on the RSI. It's kind of a low and weak, but we still didn't hit the level of 20 right now, right? So we are still, the sentiment is still negative, it's weak, it's slowly bouncing, but without the breakout above 8,943, 8,954, there is no chance for this market to go any higher. And let's just take a look at the US dollar index as well, because interesting things are going on here. As you remember from the yesterday's analysis, we still got this pattern in mind. And right now we got a potential, let's say, bounce from the level of 50% of this wave here. So the wave B might have been terminated at this level, 90.06. Right now we need a stronger move up as towards the first high of the wave A, which was at the level of 90.92, and then of course 99.1 is waiting for the breakout. The targets for this market, as you can see, are located around this three Fibonacci levels. If any of them is violated, then of course we might get suspicious about the bounce, because it might not be a bounce, it might be a trend reversal. But it's too early to judge right now. So let's just wait how this wave will unfold. The wave C supposed to be the wave, the impulsive wave. Okay, so it's supposed to be a very nice up move here in the wave C towards one of these technical, of course, resistance levels. There are two of them, 91.72, 92.44, and one of these three market levels based on the Fibonacci retracement. So this is how it looks now on the British pound, and this is how it looks now on the US dollar index. Let's take a look at the euro dollar at the end, of course, because of the data from the US that might influence this scenario. As you can see, the wave A was done. Possibly A, B, C internal subwaves were made in the wave B. So the wave B top at the level of 1.2190, just under 1.22, 10 pips lower, 1.22, which is 50% of the Fibonacci retracement, of course. So right now we might witness the top of the wave B. So there is only one wave left for the correction to complete wave C. So right now we are getting there slowly but slowly, and I think there is some kind of a short-term trend line, as you can see, and this trend line had been violated as well. So right now the market is under the bearish pressure, and we should expect a new low below 1.2060 towards 1.2013 on the euro dollar. So that's everything for me for today. Thank you very much for watching my analysis, and I hope I see you guys tomorrow. Bye bye.